Bulgaria Industries, the stock has seen close to around a 45% up move in the past year. To discuss the demand trends, the demand outlook as well from year on, as commodity costs moderate from highs, we're joined by Mr. Anil Gupta, the CMD at the company. Hi, Mr. Gupta. Good morning. Thanks so much for joining in. Well, we're reading a couple of sales notes, and they indicate that demand and volume growth has been quite strong. Now, on wires, it's strong, but they're saying that cables is far better. Give us a sense about how demand is shaping up on ground. And also your market share, it's been improving in the last few years. Have you outpaced the market growth?
Yes, you are right that because of the demand from infrastructure and government utilities as well as private capex, the volume growth in the demand of cable is quite strong. And we could see a volume growth of around 20% in this financial year compared to last year. So far as wires is concerned, there is also a growth in that, but little lesser than cables.
Okay.
And we as a company have always tried to outpace the average industry growth or average market growth by around 2 to 2.5%. So as guided in the initial Q1 of this year, we have guided that we should grow by around 17 to 18% overall for the full year, and I think we should be surpassing that. Okay. So, and we have a very healthy order book position at the moment.
All right, 17 to 18%, that's the revenue growth that you're guiding for the year?
Yes, I'm saying revenue.
And what about, since you're saying that you're growing at a faster clip than what the industry is growing at, I'm guessing your market share would have improved. That's been the case for the last few years. But in the recent past, what is the market share and where do you see that number headed?
In fact, we have really not calculated our market share, but we are just focused on our own working and our growth. So maybe that we might have gained another 1% in the market share, but I mean, these are not, firm numbers.
Okay. So we're looking at a 20% volume growth, as you said. Can you tell us, with the inflationary environment, or rather with the raw material prices cooling off, are you expecting any improvement in your margins in the second half of the year? You're currently sitting at about 10%. Do you think it can do better?
See, margins are always a matter of value addition on the input cost what we do. I've been consistent in saying that when the prices were increasing, then also we were able to maintain our margins. And as the prices cools down, everybody corrects the prices according to the input cost. So is our case. So we expect that margin should be anywhere within the range of 10.5 to 11% for the whole year. That is what I am expecting. So little improvement compared to last year.
So this 10.5 to 11%, are you taking into consideration competitive pressures as well? Because in the wires business particularly, competition has gone up. Are you seeing some pricing pressure there?
Yeah, I think in wire space, the competition has gone up, and every company has its own market space, its own brand positioning. So wires are mostly sold through the brand positioning and our relationship and penetration with the developers. So I think that we should be able to maintain the margins in the wires as well.
Mr. Gupta, if you can tell us a little bit more about where is the push, this entire, the talk has been that government infrastructure push is coming up in a big way in various sectors. What are you seeing? What kind of push are you seeing? If you can qualitatively describe that for us.
See, recently, government utilities, like especially the power distribution companies, they have come out with the last large tenders, which is called RDSS. These schemes are funded by REC and PFC, and a huge amount of tenders are being awarded to various EPC contractors, and the significant 50% of the value of the contracts are only cables. So this should see a good opportunity in this year as well as the next 2 years for the cable industry to reap in. Secondly, there is a strong demand coming from private capex, especially the brownfield projects, especially cement, steel, and also the solar projects. Apart from that, metro rail projects, suburban rail projects, and and overhead to underground conversion in the highways. That is also seeing a good traction, which I said that this is the infra pipeline, which should give a substantial demand to the cable industry. In our case, we are seeing a good growth in the exports as well of the cables.
This this power thing that you said, what is the size of it? You said 50% is cables. Can you describe it value-wise? And the projects have been put together. Tendering has taken place.
In my opinion, the value of that overall tenders is more than 1 lakh crore. And so far, around 20,000 crore worth of tenders have been awarded by some utilities to the various contractors. So rest tendering process is in pipeline, and I think should be completed in next 6 months. So this is done by all the states. So I think this will see a good demand for the cable industry in the next financial year.
Okay, all right. Mr. Gupta, what about your pricing? You're at a bit of a discount, right, in comparison to the market leader, that's Polycab. Could you confirm that? How much is that? It's traditionally been, I think, around 4% odd.
No. That we are marginally lower in the case of pricing in the wire segment compared to, but not at all in cable segment. I mean, in fact, we always maintain a parity in the cable prices with the competitors.
Okay, so with regard to the wire segment, what are you going to be focusing on? Narrowing the gap with the largest player, or focusing on volumes and gaining market share?
We are already narrowing the gap year after year.
Yes.
So every year we should be narrowing the gap by approximately 1%. And definitely I see a more competition in the wire segment because not a lot of new players are coming up. So we should see that what will happen to the competition in the next 2-3 years.
Okay. All right, we leave it at that, sir. Thanks a lot for joining in and all the best. That's KEI Industries. By the way, there's a new IPO that opens today, so let's talk a little bit about that. Landmark Cars is the IPO that opens today. It's an issue size of 552 crores, out of which 150 crores is a fresh issue and 402 crores is through the OFS route. So about 150 crores of fresh issue comes to the company. This is the #1 dealer in India for Mercedes, Honda and Jeep. So it's a premium auto dealership company. The company is profitable. In fact, it reported a profit of 66 crores in FY22 and the fundamentals have been strong. It's been a compounded growth rate of almost 16% over FY20 to 22. The margin profile has also improved. It was sitting at very low margins of around 3% way back in FY20 and that's improved to about 6%. The only problem is that there is a concentration of clients within Maharashtra and Gujarat. So diversification is something that we need to ask the management whether they are looking at that. And also there's a lot of competition within this dealership space. At the upper end of the price band of around 481 to 506, the stock is valued at 28 times PE as of FY22. But, well, to give us more details on the overall business as well as the way forward, we have Sanjay Thakkar, who's the chairman at Landmark Cars, joining us right now. Mr. Thakkar, good morning and thank you for being with us here in the studio. I was just mentioning that 400 crores would be the OFS and 150 crores is through the fresh issue route. So 150 crores comes to the business. Tell us a little bit about what you plan to do with that and what kind of growth are you looking at?
Yes, sir. Thanks for having me on the show. So over a period of time, we started with one dealership in 1998. It's 25 years since we are in business now. And that has grown to 112 outlets. And this has happened because of two factors, if you ask me. One is that the ownership and management has been separated at Landmark since the beginning. Most of the dealership chains that you will see in India are promoter-owned and promoter-driven. They work on it day in, day out. Also, we have an asset-light model. So we do not own properties. Only 2 out of the 112 properties that we have today are owned by the company. Now, that has made us grow as fast as what we have been able to grow. We are not only the #1 dealer for Mercedes-Benz, but also for Jeep, for Honda, for Volkswagen in India. We will be a meaningful player for BYD. We are with Renault and Ashok Leyland trucks. That's what we do.
Sanjay, what is the size of the opportunity, according to you? I mean, because you said you've been around 25 years, right?
That's right.
And I think Sonia just mentioned the total profits were last year was 66 odd crores or so.
That's right.
what's the size of the opportunity we're
So
looking
last year, again, one needs to understand that we had a curtailed operation because of COVID. We didn't have a full year of operation. I mean, that's what I can say on that. The size of the opportunity is enormous. Let's take Mercedes-Benz, which is right now in the news more than any other brand, so I'm mentioning it. It will have the highest ever sale this year. The volume would be maybe 15.5, 16,000 is what everybody is talking about. Compare this to China, 7.5 lakh cars. Compare this to Korea, 70,000 cars. Now, if India were to become a world power, third largest, fourth largest economy in the world, really this is not what the country deserves. The country deserves more. We believe that the aspirations of the people are higher. And the waiting list on, say, a Mercedes-Benz car, again, what has been in public domain is that they are on with 5-6 months of waiting we are sitting on. So I believe that the journey has just begun. We are here for a long haul, a long road ahead of us.
All right. You know, Sanjay, you're hitting the sweet spots in terms of asset light, ownership and management separate. The street likes to hear those sort of comments. But as you know, we said earlier, the 150 crores will be coming to the company, right? So that, how does that going to be utilized?
Yeah,
if you could break that up for us.
Yeah, so that is something that we will go to repay our working capital debt.
Okay.
So except for Mercedes-Benz, where we do not hold any inventory in our books from 1st October 2021.
Okay.
It's a different business model that has now come into play. We hold inventory. And the money will go to repay that. The entire money is going to be utilized.
What is the debt currently, the working capital debt and consolidated net debt?
So we do not have any long-term debt in the, no meaningful long-term debt in the company. The working capital debt, which is basically seasonal in nature, where we hold stock of spare parts and cars, hovers around some 300 odd crore rupees generally.
Okay.
So
what is different between, you said that with Mercedes you don't hold the inventory. Could you tell us what is?
It's an interesting model which has come, what is now commonly known as retail of the future. So what happens is that the entire stock of vehicles has been taken off our books. We have ceased to be dealers, but have become franchise partners or agents. So when you enter the showroom, you will see the cars parked in the showroom. They are not typically owned by us now. They are owned by the factory.
Okay.
The test drive cars are owned by us, the manpower is ours, the showroom is ours. But the stock is not there. There is all India one price. There is no inter-dealer discount which happens anymore. So it's a transparent thing. The customer sends money directly to the factory and the car is delivered. We do the insurance, finance, registration, everything.
So the risk of the inventory is with the company.
It is.
Not with the OEM, not with you.
Not with us
But for them to assume that, they would kind of, would margins, etc.
In fact, the retained margins at our end have increased because of this. Earlier, what was happening is that good amount of money was going in holding cost interest and a large part of our margin was going in discounts.
Okay.
Now that has gone away. So the retained margins have significantly improved since the...
If you can just help us with some growth targets. I mean, you've done over the last few years about, on an average, a 16% compounded growth on the top line. Is that something that you can sustain in FY24 as well? And what would the growth triggers be?
Yeah, so the Indian, there has been a significant shift towards premium cars. There has been a 20% shift between 2017 and 2022. People are buying premium and luxury cars. Luxury is still 35 to 40,000 units in all for a country like India. And we are sitting on significant back orders, on significant orders. This year also was a year where we saw curtailed supplies because of the chip shortage initially and then Ukraine war later on. So once that happens and then there is a increase in the selling price, all the OEs have increased the selling price. So my sense is that this cocktail is looking at a significantly better growth than what we have seen earlier.
Okay, Sanjay, very quickly, we're talking about the luxury cars. What about the pre-owned vehicles? It's a smaller part of your business. Where do you see that contribution headed?
So pre-owned cars is a very interesting and an uncharted territory for new car dealers. In America, 30% of the used cars are sold by the new car dealers. That's not the case in India. And there are several reasons for it. what we at Landmark will be doing, and we have invested in a company which is technology, a company, new age company. That's what at Landmark we do. We not only do what we do, but also invest in disrupting technology or people who we can partner with. So that technology will give us real-time valuation of the pre-owned cars. We will be focusing on buying and selling our own branded cars.
Okay.
So
any more such investments or acquisitions that you plan to do?
30% of what we are today is by way of M&A. Since the time we have started, 30% is what we are. So that's what we will continue to do. I think we will have better opportunities when we get listed. I think it will open more doors.
And will you move out of Gujarat and Maharashtra because there's a concentration
yeah,
risk
so
there?
really not so. We are very meaningful now in NCR. We are in West Bengal, we are in Punjab. So when we wrote the document, yes, there was these things, but it is spreading as we speak.
All right, Sanjay, we'll wish you all the luck. Thanks very much for your time. Thank you for dropping by.
Yeah, and what I can say is that a lot of people have shown confidence. The anchor book which just came in, HDFC Mutual Fund, Nippon Mutual Fund, Goldman Sachs, Birla Mutual Fund. So it gives me a lot of hope.
All the best, all the best.
Thank you very much.
Thanks.
That's Landmark with the offering in terms of the IPO. Well, our special segment is charting trends, which comes up next. Rashmi Bhatnagar is CMT, head of global equities at All Star Charts. She's back with us on the program. Rashmi, welcome back. Thanks very much for your time. Good to have you here. We got about a 20-odd point gain on the Nifty. I just want to start with this divergence between what we're seeing on the banks and the Nifty, Bank Nifty and the Nifty. Significant divergence, performance divergence opening up. How do you make sense of this and your near-term view for the Nifty as well?
Right. Good morning, Prashant. Good morning, Sonia and Nigel. Thank you for having me back. There is a significant divergence in Bank Nifty and Nifty. We do see that there are times when Bank Nifty outperforms the Nifty, and there are times vice versa as well. We are, as of now, in that moment where the Bank Nifty is outperforming. And how? Because it's trading at all-time highs right now. We got all-time highs in Nifty prior to Bank Nifty. But as of now, what we've seen is that there is a breakout in Bank Nifty above the level of 42,750. So the range that we're looking at is 42,750 to say about 59,250. It's a big target, but essentially this is looking out months and quarters ahead. But as of now, banks have taken the lead for sure. And within Bank Nifty, if you dig deeper, we've seen that PSU banks have taken the lead. And that doesn't tend to happen too often, or at least for too long as well. But we've seen a sustained rally come through in PSU banks. They've continued to trade above their 2018 highs, which is a big positive, because across the globe, we saw risk-on indicators roll over from 2018 at the 2018 highs. So the fact that it's trading above that level is great. So in PSU banks, we're essentially looking at levels close to 5,360 if this rally continues.
Sure.
But getting back to your point on Nifty, Nifty has breached that range of 18,300, 16,800, that narrow range that we were trading in. So now that we're trading above 18,300, it opens up targets of close to 20,400 going forward. We're seeing a little bit of profit digestion at this level in Nifty, but not of a great concern as long as we trade above 18,300.
Okay, so just coming back to your Bank Nifty range, it is a pretty wide range. So you're saying that 42,750 all the way to 59,260 is what you're looking at. By when do you think this 59,000 level would get hit on the Bank Nifty? Any timeline that you're working with?
We're not working with any specific timeline, but definitely looking out quarters at least. This is not something that we're expecting to be achieved within months. It could be 1 year, it could be 2 years, it could be 6 months. So what we are prepared for is the momentum that we are able to catch in Bank Nifty, and we're basically just going with that.
Okay. In terms of the IT index, I wanted your thoughts because, that chart has been under quite a bit of pressure. Any recovery that you see anytime soon on the charts, and what do you do with individual stocks?
Nifty IT, not so much, because we've seen that this particular index has been trading in a range again. This is between close to 30,800 and 26,300. And we've seen that just this past week, a couple of weeks back, we saw that the resistance held its ground. So unless and until we get out of this range, there's really not a lot of conviction on either side. So there's only going to be a range-bound move. So there's no conviction in terms of buying or selling emphatically in any particular stock. So that's something that we're avoiding at this point. IT.
Okay, all right. You have a view on the PSU bank space and also FMCG as a space, Rashmi. Quickly, if you can run us through
Right.
both.
So the PSU banks have been, as mentioned, they've been trading at 11-year highs. Just a ticker there. So it's trading at 11-year highs. That's a big level to be trading at. We're looking at 5,360 as the next target, as long as it continues to hold above 3,730, and as long as it continues to hold above its 2018 highs. Now, when we're looking at PSU banks, we also have UCO Bank as one of the stocks that we're focusing on. The breakout or the risk management level would be close to 2220, and the target is essentially around 4450. And you'll notice that this is actually a 6-year base breakout. So we're big fans of big bases and breakouts. So we say the bigger the base, the higher in space. So we look for big bases, we look for breakouts, and we like to enter that trade when the risk is least. Next, we have Nifty FMCG. It's trading close to about 46,200 thereabout. The target that we're looking at is around 50,100. And we have Godfrey Phillips and VBL from this sector that we're focusing on. Godfrey Phillips, a risk management of 1825, target of 2300. Again, a 7-year base breakout there as well. And VBL has been evergreen. We've been invested in this for quite some time. So this is definitely has been a wealth generator for us. 1395 is the risk management level there, and 2125 would be the target.
All right, a couple of more stocks. Okay, that's on Varun Beverages. That's a big move there. And Godfrey Phillips, what was your target, you said?
Godfrey Phillips, the target is 2300.
2300 on Godfrey Phillips. All right.
Yes.
Just wanted some thoughts on how you will approach the metal space now. Any targets on, say, something like a Tata Steel or JSW Steel?
Again, with metals, we're not getting, what we like to do is we get into sectors where we have a lot of breadth support. We have more number of constituents breaking out or at least moving in a particular direction. With metals as well, we're seeing that they're moving in a narrow range. So until and unless we get that sort of a confirmation on either side, we'd like to stay away from the sectors. So the sectors that we'd be focusing on right now would be PSUs, banks, FMCG, industrials for that matter. Those are the sectors we're looking.
All right, Virashmi, we'll leave it at that. Thanks a lot for joining in and giving us your view. That's All-Star Charts talking about a big upside. The Bank Nifty, their upside target is 59,260, and they talk about that achieving that target in the next couple of quarters itself. Well, no surprises because some of these banks are hitting fresh 52-week highs even as we speak, something like an Axis Bank at a fresh 52-week high. Let's slip into a quick break. On the other side, Manisha will join in for a quick check on the commodity space. Well, we have talked a lot about the equity markets, but let's get a quick word in on the commodity markets as well. Manisha Gupta is with us. Manisha, what's the one commodity you're looking at today?
I'm absolutely not taking my eyes off the silver prices, where we are trading at a 7-month highs, and we have seen very strong gains continue into the markets there. So while we are holding about $23 per ounce in the international markets, the prices have been up nearly 23% in this current quarter, and we still have some 15-20 days to go, and the markets will completely latch on to what the US Fed has to say in a couple of days from now. The support comes in from the fact that the US inventories have declined by 70% in the last 18 months to near 1 million ton there. When you look at the LBMA inventories, those have continued to decline for 10 months, and they are also at a record low of 27,000 tons there. Markets also are taking support from the fact that you are looking at a big deficit around this time around. This is the data from Silver Institute, where we saw a deficit in silver at 48 million ounces in last year, and this year it's nearly 3 times more at 194 million ounces. Also, when you look at the imports that have continued quite strong into the Indian markets, the physical buying has been strong. So the last time that you saw a record import in India was in 2015 at 7,530 tons. And this year we are looking at nearly 8,000 tons of silver imports into the country. Globally as well, we're looking at record demand this time around at around 1.21 billion ounces. If you look at the prices itself, those also have been on the higher side. But before that, this is a supply-demand number that you are seeing. So in last few years, while in 2016, 17 and 18, we saw demand lesser than the supplies there. But in last 3 and 4 years, that completely has changed, where you are looking at higher demand and lesser supplies. And that's exactly what we are dealing with in this year as well. So when you look at the silver prices in the Indian markets, we've seen a range of 51,000 to 73,000 on the higher side. And we seem to be trading on the higher side of the range at 68,000 right now. All-time high in 2020 was 78,000, and the markets do believe that in next year, that is in 2023, you perhaps could be staring at those levels yet again. But when you look at the global banks and brokerages, they absolutely do not see eye to eye. Look at the kind of divergence that the markets are anticipating for the next year. Metal Focus is totally bearish at $16.5 per ounce of an expectation, and the most bullish coming in from Investing Haven at $36. 25 to 28 is where Commerce Bank and LBMA seem to be believing that the silver prices could be trading for the next year.
Okay, all right. Thanks a lot for that, Manisha. Well, let's get back to some stocks that are moving around in this first hour of trade. Abhishek joins us to tell us about Bandhan Bank. They'll be receiving closer on 900 crores. Abhishek?
Well, Nigel, as you mentioned, Bandhan Bank has received the first tranche of money from the insurance that they had claimed earlier. So, bank has recovered about 916.6 crore under the credit guarantee scheme. The total due is about 2,500 crores. So, the next tranche of money around 1,500 to 1,600 crores will come in Q1 FY24. We have a brokerage note on the same BNK Securities, who says that the exchange filing shows that the bank has received about 9.2 billion under the credit guarantee scheme. So the next tranche, as I said earlier, will be due in Q1 FY24. This could mean, going in Q3 and Q4, the credit cost estimate could be lower than analyst earlier expectation. So lower estimate would mean that healthy profitability for the bank going ahead. Back to you.
Right, Abhishek, thanks a lot for that. So that is on Bandhan Bank, trending higher. Let's slip into a quick break. On the other side, our special segment is the economy. Lata will connect with Louis Cools, the chief economist, Asia Pacific at S&P Global Ratings, to discuss the 2023 outlook.